Welcome back everyone. In this video I'm going to be talking about how I made 8.3% growth in 24 hours based on just 1% risk per trade. So if first you can like and subscribe, that would be very much appreciated, and now I'll get straight into it. So first you'll note on Euro GBP price was in a long downtrend. I am of course using the 5 and 15 minute time frames. That's all. I talk about why I do that in a previous video. I also talk about how to trade flags, as you'll see here in a previous video, so make sure to watch those. But price was in a bearish trend. Price had recently in this major structural push broken structure down, and this flag was just a retracement. So all I'm now doing is waiting for the flag to break and for structure to become bearish. So on the push up here, price had exhausted around this point previously. It then failed to break those wicks again and impulsively broke structure to the downside. So when it breaks down, we're breaking all these lows strongly. Price doesn't bounce up off anything. It just strongly and impulsively breaks structure down from the top and then comes up to retest. So all I'm now doing is looking for that retest. You see price exhausted. Clearly here we get two big wicks on the 15 minute. We also get a deep test on the 5 minute. I entered with all this exhaustion and my target was set at around 2.8 R, or 2.7 in this case. It was 2.7 to 2.8 R based off these lows down here. So normally we'll aim for 2R on some setups, but on some particular setups when it's more of a major structural move like this, we can aim a bit further. That's why I aimed a bit further. And I used these clear wicks here down as my guide, and as you see, they were tapped. Now, we could have also then again, if we had aimed a bit further, when price pushed down, for example, if we're aiming further and we see that price has pulled back up and then pushed down again, when we see these wicks at the previous low, we could have closed out here early. I know some people in the academy did that. That's absolutely fine. But the key part here is the structure. The overall trend was down. We had the flag break to the downside. We had the impulsive breaker structure reverting back to the bearish minor structure. When we had been in a bullish minor structure, we took the retest and then we rode price down. So this was 2.8% bagged on the first trade. The second trades, or second and third trades I should say, that I took were on GBP, JPY. Now, if we ignore all this to the right, what we saw is that price had been trending upwards. We did have this uptrend earlier this week. Then, although we had this strong push down, we did have enough structure going on here to say that we could potentially get a buy. Now, that eventually failed, but we did get some trades in the meantime. So, first off, note that structure is bullish here. We have a higher low here. Price was pushing down, failed to break lows again, and then pushed up. And then it pushed up strongly again. And when price pushed up strongly this time, it broke all the structure here. So all of the structure in this region have broken on this push up. Therefore, when price came back down, I was looking for buys. I wasn't going to go for long-term buys, but 2R, as I said, this is more of a minor structural trade I was looking for. Now, the first one, I used this level because this was the top structure that was being retested. And I got in a bit early. We did see exhaustion. We saw this doji on the 15 minute. We saw even a bullish candle. We even saw a push up quite strongly on the 5 as well. Now, it just proved to be a bit early. I would take that trade again. It was A grade in my opinion. Price pushed up, even exhausted on the level, and then just happened to come down again. So the structure there was nice. It was all in my favor. I would take the trade again. Now, the second entry after this was a bit more advanced because we'd started to form this minor bearish structure at this point. So when price starts pushing down like this, we need to look out for the fact that we are, although the structure is bullish here, we are in a minor bearish structure, and you'll see that even clearer on the 5 minute. Sorry, I'll scroll back. Right. So you'll see that even clearer here, because although the 15-minute major structure was bullish, and we had this big strong push, price was forming lower highs and pushing down, wicks pushing down. Now, in this case, I wouldn't want to enter too high up, so I waited for the deep test, where price pushed deeper below the 15-minute structural level, pushed deep, and then gave me my entry, and I got out just perfectly here. This should be a 1 to 2, it was 14 pips with a 7 pip stop. Right, well, you can see that anyway, it did move 14 pips. And we got out just in time, and this is why for this type of entry I always use a 2R target, because it's based on substantial backtesting. Price can reverse after it hits it, and that's exactly what happened. But this one, we just waited for that deeper test after getting in a bit early, and we did get in at the deepest point at this point where price was pushing down, then had that big exhaustion downwards, and then pushed up. So that was trades 2 and 3. We'd had the big Euro GBP win, a big GJ win, and a small GJ loss at this point. So from there, it was onto USD CAD yesterday afternoon. Now, of course, this was news-based push down. We don't need to worry about this at this point. Before this, as you can see, price was clearly trending to the upside. We had big major swings up, breaking structure up every time. And then all we had here was a bit of a consolidation really, but we have to again note that we're in a bearish minor structure because price is pushing down, breaking lows again. So in this point, we're not going to be taking buys because the structure is bearish. We're not going to take buys in a bearish structure, even though the major structure is up. So all we then did was we'd have to wait for price to form a new bullish structure so that we could then trade off that. And what happened is price formed this double bottom here. Let's just draw this on quickly. Price formed this double bottom. It then came up, formed a higher low, and broke structure up. All these wicks that had formed were then broken to the upside and broken strongly as well in this 15-minute candle here. So this gave us the break we needed. Then price came back down to retest the structural level. It's important to note that price did, although it broke the structural level, it did not break the structure. It didn't violate structure downwards. Sorry, I should have rewound, but we'll just move on from here. Although price broke the structural level back down, it never violated structure down. We never broke any lows to form a new lower low, so structure was still bullish. Now, this is a difference between structure traders like us and support and resistance, supply and demand traders who just use levels and horizontal levels and don't note the structure. Structure was never violated down, so this was still a valid deep test in the market. And all you saw is that price came back deep, showed multiple wicks and multiple indecision candles, and then big wick down, exhaustion, and we got into the trade. Now I took 2.5R, so 2.5% on this one because I was targeting just below the 15-minute highs to the left here. As you'll see, price could have gone a bit higher, but it was getting towards the end of the day, and I'd already had quite a strong day on GJ and EG as well anyway. So I just aimed, as I said, for just below this 15-minute high. We could have aimed towards the main highs as well, and you see that would have been tapped as well. That would have actually got us another 1.5% really, but 2.5 is perfectly fine with me. I'd already had a strong day on Euro GBP and GJ, as I said. So I took my 2.5% and went on that one. But really clear structural trade. All it was waiting for the minor structure to line up again with the major structure and the major trend, and then we entered. Okay, so finally getting onto the last trade on GBP JPY. This is this morning. Originally, what I was looking at here was when price, so we'll start from the beginning, we had been trending up, as I said originally on GBP JPY, but then when we came back down, we formed this gradually down, but also quite a sideways market really. If we're looking at from the 20th, so the last 2 days really, price has been sideways. So in this instance, I was seeing potentially an inverse head and shoulders because we had potentially a shoulder here, a deeper test for potentially the head, and then potentially a shoulder here. But, and I explained this to our members in the academy as well, if we saw at this point a break of structure down again, because we'd seen this breakdown, if we then saw another break of structure down again, I would count the inverse head and shoulders as invalid. It wouldn't be likely anymore because price had broken down again. And what we actually saw was this break of structure down again here. We clearly broke structure, price broke the wicks and closed past the wicks, so break of structure. Therefore, what I'm seeing here is a bearish structure. So push down, pull back, break down, pull back, and a breakdown again. So that for me is then a bearish structure. We simply waited for the retest. As you can see, price came back up, formed a 15-minute candle with a wick closing below the level instantly. Switch to the 5-minute, we saw clear exhaustion in the market and price beginning to show bearish momentum. We entered and pushed down. Now this one, technically we could have got a bigger trade. We could have got a 3% trade here, but, and this would be based off down towards these lows, just to know if it was a 3% trade, we'd want to take it before these lows. but it's the plan that with minor structural trades and minor structure continuations will take our 1 to 2. So that's exactly what I did. So all of those trades added up together equal the 8.3% in 24 hours. All really simple. Overall, it's an 80% win rate because 4 out of 5 trades. Nothing fancy, just keeping it really simple using 2 time frames based off trend, structure, minor structure, and major structure. All it is understanding these advanced ideas, but in a simple way, and then executing when the plan is met. So that is my breakdown of all those 5 trades. Thank you very much for listening and watching. Please like and subscribe, and I'll see you in the next video.